What is up, you guys? Nick here, and in today's video I want to discuss the potential ramifications from XPENG's upsized share offering. Share dilutions have been an all too common theme amongst startup companies, and especially those with massive operating expenses and cost of revenues. Hardly any industry has higher CORs and operating expenses than startup automotive manufacturing companies, especially those based in the electric vehicle industry, as XPENG obviously is. XPENG is down on the day as a mass sell-off is taking place. Their shares are sitting at $44.64, down $4.10 in one trading period alone. This represented a whopping 8.41% loss. Why is this happening? Share dilution. So what does this mean? What effects is this going to have on investors long term? Should you harness this opportunity as a buying window, or should you completely avoid the stock for the time being? We have so much to get to, but first, Webull has increased their promo. They are now offering 4 free stocks worth up to $3,700. When you 1. Sign up, 2. Open an account, and 3. Deposit in at least $100 using the link in my description. They are a 0% trading platform with some of the best analytics in the game. I use this app every single day, guys. It's really awesome. This is such a no-brainer, guys. The promo ends soon. Don't sleep on it. If you haven't yet, hit that subscribe button. I do a ton of videos like this, keeping my subscribers ahead of the curve. Smash the like button while you're at it, and without further ado, let's get right into it. There has been so much talk about XPENG in the past few weeks. This company before, this week was one of the most expensive Chinese EV stocks in the game. So why are they falling down from on high so drastically and so abruptly? Well, XPENG has gone through a share dilution and investors are running for the doors. What does this entail for investors? Well, it's important to note that many young EV companies do indeed go through their fair share of share dilutions. Fair share, get it? So what are these and why are they done? Well, a secondary share offering or a share dilution is essentially when a company issues out additional shares onto the open market for investors to then, go purchase in order to gain capital funding and additional liquidity. In layman's terms, companies are performing share dilutions to gain cash. Now, these aren't always deleterious for investors throughout the long run. However, short term, it can definitely pull down these share prices, and I'll explain why. Okay, an analogy. When a government issues out more money into the open market, starts printing money, the value of every single pre-existing dollar decreases. As with more supply, the demand decreases. The same thing is occurring here as the company issues out more shares onto the market. For a young startup company, if you were a potential investor, would you rather own shares at 100% of their original value and have the company go bankrupt, or own shares at 70% of their original value and have the company receive additional capital investment in order to continue to propel their company forward, expand, and put forth money into research and development? This would hopefully allow the company to not go bankrupt. These original shares are worth nothing if the company eventually does go bankrupt. Absolutely nothing. So you can think of it as a company's primary responsibility is to do essentially anything it needs to in order to keep capital funding flowing, liquidity high, assets on hand, and liquid cash to perform short-term moves for long-term gains. To use the sappy old adage, a share dilution is essentially short-term pain for long-term gain. So why did they do this? Where are they putting their cash towards? Why did this need to happen? Well, XPENG is a rapidly growing company, and rapidly growing companies require a lot of cash. They do indeed need additional capital liquidity for short-term spending. They announced on December 9th that the pricing of its underwritten following on an offering of 48 million American Depository Shares, or ADS, each representing 2 Class A shares at a public offering price of $45 US per. The underwriters have an additional 30-day option to purchase up to 7.2 million additional shares for a total of 55.2 million potential shares total. Now, it should be noted that the share price did kind of hone into this 45 today, as essentially this is what investors are seemingly thinking that they are currently worth, as per the share offering. The proceeds from this offering will be approximately $2.2 billion USD. Now, this is a ton of capital for the company to use for short-term moves. Now, what is XPENG using this capital for specifically? They released in their press release that they expect to use the offering for research and development, hardware and data technology, sales and expansion, expanding their supercharging network, expanding globally, and its strategic investment in core technology of smart electric vehicles, and finally, short-term working capital needs. This is a lot for $2.2 billion to cover. However, it just shows how eager they are to expand in basically every single facet of their core business operations. Credit Suisse JP Morgan Securities, BofA Securities, and Citigroup Global Markets are all acting as joint book runners for the offering. Now, for me as a shareholder, I am actually very encouraged by this share offering. If you are ever investing in a startup company, especially a company that is going to need bulk quantities of capital liquidity for short-term growth and viabilities, if you're basically every single startup electric vehicle manufacturer, share dilutions should be more than expected and are absolutely predictable. This comes with the territory. It shows that a company is continuing to grow and expand at a rapid rate, and this cash is moving towards essential services for the company at large. XPENG is currently leading the pack in regards to their L4 driverless technology and autonomous driving software and continues to pour cash into its ongoing development. This is very promising as XPENG does indeed see the continued promise and motive to push further into this technology and software as a crucial aspect that sets them apart from the rest. This shows that autonomous driving and L4 data technology is clearly a high priority for this company and they are willing to absolutely pour cash into it. They realize that this is going to set them apart from the pack. It's also important to remember that XPENG is a vertically integrated company having their own production plant. They currently have plans for building another manufacturing plant poised for late 2022. These require vast amounts of cash, so much operating expense, and short-term spending. However, once up and running, these are geared to increase companies' gross and vehicle margins faster than an outsourcing model would be able to do so. It's because of this that I really am not overly concerned short-term with this additional share offering. Yes, shares indeed do lose short-term value, but where this company could be in the future, in a nascent industry, and being vertically integrated is immense. Now moving into what investors should do. This essentially depends on your outlook of the company. If you are strictly a long-term investor, these shares are moving down essentially relative to their value. So although you can now purchase additional shares for a set amount of investment, the shares are simply just further diluted than they were when they were put into the market. So you're not losing money on your new investments moving forward. I really do see huge upside in this company as they are pushing ahead of the rest in terms of driverless tech and autonomous driving. They are vertically integrated. Guys, this is going to need continued money and liquidity. I really do see huge upside in this company. This sector will be massive in the coming years. XPENG might implement their software into robo-taxis, and the company could potentially gain from selling their software and technology and patents to other companies in the coming years. They have already outfitted their newest sedan, the P7, to be able to harness and utilize this new autonomous driving software, and they are clearly pushing forward with this sentiment into the coming quarters and future months. So you know what? I am indeed buying because I am a long-term investor. I only preach long-term investing on this channel. This company could be massive in the coming years and decades. I'm not thinking on the short-term, week-to-week or month-to-month volatility. I'm thinking years down the line. They have continued to increase their delivery capacity every single month. And you know what? At the end of the day, that is the fundamental aspect of this company, to, increase deliveries on a continual basis. They have not proved us wrong in that aspect. Now, yes, this is short-term pain. Our shares have been diluted, but these shares do hold so much promise for the future. Anyways, guys, I will have an update video on this in the coming weeks. There is so much movement within this stock, within this company. They have really gained the limelight. I will keep you guys all informed as future developments advance. Smash the like button for the YouTube algorithm. Don't forget about the Webull promotion. This ends so soon, guys. Up to $3,700 for free when you sign up, open an account, and deposit in at least $100. Using the link in my description, this really is a no-brainer. Anyways, I will see you guys all next time. Take care. Cheers.